Hi, everyone. Welcome back to another episode here at the Vitray Effects podcast. Today, I have a very special guest with us. His name is Bernd Skorupinski. I'm not sure if I pronounced it correctly.
Skorupinski, SKO.
But
it's fine. Everyone butchers it. It's fine. No worries.
It's not easy. Well, Bernd, thank you so much for being here. I came across
It's my pleasure.
I came across Bernd's content through Search Trader and his YouTube channel, and I felt that he has so much value to give us traders, our communities in English. However, I do know my community mainly is in Spanish, so we're going to try to pass this information and all we're going to talk here today to you guys in Spanish as well. So thank you again for being here. I know you're a very busy guy, but you took the time to be with us today.
No, Raul, thank you. It's my pleasure. Really, thanks for the invite.
Awesome. So let's just start with the basics. I know you get asked this quite a lot, but who is Bernd? Tell us a little bit about your background. You know, how long have you been trading and all those kind of things that we want to know.
Yes. In a nutshell. So originally, you might hear from my accent, I'm from Germany, but I live in Dubai since 2009. So since 15 years now almost. And Dubai became my home. I trade since roughly 12 years, but full time since 10 years. So I'm 40 years old, so I might be a little bit old for the community. So usually the traders, especially on YouTube, they're like mid-20s. So I'm 40 years old. I have a family. I have a 9-year-old daughter. So since 10 years, basically, I provide for my family with trading. And in terms of my trading background, so 10 years full time. But when I started trading, basically, I consider myself a multi-asset trader. So what does it mean? So when I started trading stocks. So my background was in stocks. But pretty quickly after maybe 1-2 years, I moved into futures. So the real underlying asset, trading real futures. And I think this is where my entire edge is coming from trading futures. So my whole life, I was trading futures. So literally everything, equity indices, treasuries, agricultural market, FX futures, precious metals, commodities, energy. So literally the 9 yard I was trading my whole life. And just actually only, I would say, quote unquote, recently 4 years ago, I ventured into the Forex market because of CFD trading, because CFD then became really popular and it's just very efficient and effective in terms of capital usage. So that's in general my background. And actually, because you said you came across my name through Search Trader, right? So I just also recently, actually in July, August 2022, 2020. So literally 1.5 years ago, I came across prop trading myself only like 1.5 years ago. And this is when I started my prop trading journey. And to cut a long story short, just recently I was awarded for FTMO, the all-time record holder in terms of leaderboard appearances, 120-time leaderboard appearances in only 1.5 years. I personally now manage 4 million in prop firm capital, 2 million A-book, 2 million B-book. So A-book is real capital. The other 2 million is like virtual capital. And actually, it's not yet announced, but when the podcast comes out on your YouTube channel, I get next week or the week after, I get another $1 million, which is A-book capital from another prop firm. But I cannot yet announce the name. So overall, then it will be 5 million of prop firm capital. So that's my accomplishments in a nutshell and my experience, my history.
That is amazing. And I think one of the also reasons why we wanted to know you a bit more is because of that achievement that you've gone with FTMO. I know you have funded capital with many other prop firms, but the fact that people are seeing you, in the leaderboard and 120 times in that leaderboard, is it you're going to be? Have you been on the first place or just in average different places in that leaderboard?
Yeah, different places, but I have been on the first, ranked first for 3 consecutive months. Actually, wow. That's what I think. Actually, So yeah, yes, but of course I had to I had to climb the ladder, right? So yeah.
Oh yeah, for sure. And I guess, part of that background is that, you had to learn for someone. Can you tell us a little bit
Mm.
about that? Like how did you start, your education in reference to trading?
Yeah, I get this. I get this is also a question I get really asked quite a lot. Again, since I started trading literally 12 years ago, the entire educational space was completely different. So nowadays, everything is online. A lot of people go just on YouTube to learn or buy books. Back then, that entire educational space was completely different. I didn't even know back then if there was something on YouTube or not. I really can't remember. But when I was learning, I went to a physical place to learn, and my mentors, they were actually former, and also this is where my edge is coming from. They were like real traders. What do I mean with real traders? So we are also real traders, but they were like former floor traders,
Wow.
literally trading on the floor on Chicago Mercantile Exchange, the CME Group, the biggest trading floor in the entire world, and one in New York Stock Exchange. And I was learning from the biggest natural gas futures market maker back in the day. So I had a few mentors that I learned certain things, but all of them were like floor traders, former floor traders. So I think also this is what helped me a lot to become who I am today.
Yeah, actually, I did hear that from a previous podcast that I saw you in. Um, I think the in person is something that you kind of push a lot. You learn from people in person. Nowadays, I know it's virtual, but I also agree that that in person approach is very important. If you get access to a mentor and you're able to do it in person, that's kind of like I don't know. It's kind of like going to the university, virtually, and then in person is totally different.
And that's my whole point. I mean, you can do now this one-on-one coaching. You can do this online as well. It's literally, I mean, the technology is so far advanced. 12 years ago, I think there was no Zoom, right? There was
Yeah, no, Skype.
Yes, there was maybe Skype, and the quality was horrible.
Yeah.
But my point is, nowadays, since the technology is so far advanced, you can do this literally. It feels like you're sitting next to me. If you do like screen sharing, you can even like write on the screen, stuff like this. So it doesn't have to be like physical one-on-one, although it's somehow different. But it's like when you have kind of if you compare like one-to-one coaching, regardless whether it's now online or physical, versus I just watch a couple of videos or do like a self-learning path, it's like day and night. You cannot so I always compare it. I always say like, hey, the one-to-one solution is like the fast track. This is your fast track to success if you have the right mentor, of course. But you cannot compare it. Like the progress you make is incredible if you have like really these one-to-one or physical sessions. It's like, as you said, the comparison fits nicely. It's like literally, and I have university background my whole life. I have a business major. I studied actually also in the States at UCSB,
really?
a university in California in Santa Barbara, just for a couple of terms. And so, yeah, I come from that kind of background where I had to go like sit in a classroom environment to study. And that's what I applied when it came to trading as well. For me, this made the most sense. If I have to learn something, if I have to learn another profession, if I have to learn a skill, I have to sit in a classroom kind of to learn something. And that's what I did. And it helped me tremendously to accelerate my trading journey.
No, I feel like the whole difference, like when you teach someone virtually, it does help, like because as you said, nowadays is easy because of technology. But when you get the chance to do it in person, like the information gets better transmitted, I'll say. And
yes, it feels,
I don't know,
it's weird. It's hard to, I hear you. It's hard to explain, but being able to touch someone, and like ask questions like physically, you know, on a piece of paper or whiteboard. I'm old school, by the way. So having everything on a whiteboard and properly explained, you know, it's different. It's really different. But anyway, yeah, the technology is so far advanced nowadays. I mean, it's great to do it online, and not everybody's able to do like physical one-to-one training, and it also requires a lot of resources from the mentor itself. Not a lot of people do that. So yeah, so I was lucky back in the days because this was just the norm, because there was no online schooling.
Yeah, of course. Actually, also I wanted to know a bit more. How did you actually got into the trading, topic? I myself, a friend of mine introduced it to me. I kind of have to admit that I started the wrong way. I started wanting to make money, no education for me, and it took me, quite some years to struggle and then understand it. I was in my early 20s, just when I started this, so it was like my thoughts into trading was not as professional as nowadays. But who got you in this trading, journey? Who introduced it to you?
Yeah, I'll answer that in a second. But to your point quickly, when you said you got into trading early 20s, so I think when you are getting into trading, and nowadays the age group in general are like early 20s, even some of them like 17, 18, 19. You don't have yet, and that's what I feel like and what I see, you don't have the maturity to have. You don't have. In trading, you need a certain level of maturity. That's important, because you handle money, a lot of money on a daily basis. If I imagine, because I'm 40, I started with my late 20s. I could have never handled, that much pressure on a daily basis, handled money that well in my big 20s, or like even like 80. With 18, 19, I was running on the pitch playing football. I could have never imagined, being that mature and not playing, but trading. So I just wanted to say that to your point, because
it's the truth. It's the truth. It's the truth.
So it requires that. Yeah. Sorry.
You don't manage like money as nowadays. Like now I'm a husband. I got kids, and through the years you mature. You can't go crazy because there's people that rely on you, right? But back then, it was just whatever I got, it was just not even investing it. I was just spending it. So it's a different.
The focus was on the focus. So do you agree with me if I say like you need a certain level of maturity to be successful in trading?
Completely. And that's something that people do need to know, because I have an audience that, we got a lot of traders that are young, like some are older, but the ones that have a certain age and up, like 30s and up, they're more mature. They come into trading with a purpose. When I started in my early 20s, I didn't have a purpose. I was just like, I just want to make money. And I thought it was just clicking a buy, sell button. And I got lucky because, in my story, it was like, I got a friend that told me, you can make good money with this. So we got lucky trading euro dollar. We just we put a whole lot into it. Over leverage, and we made money. But then 2 weeks after, we lost it all. So that was that's first approach.
Yeah. It's like I always make that analogy. I mean, it's that lucky beginners phenomenon, right? So for some reason, the beginners, they always make money first, but then basically what happens is you climb up a higher building, right? And then you jump again without the parachute. And if you're lucky again, you survive. But what are you going to do? You climb up another building, another skyscraper, and then you jump again. And at some point of time, it will bite you in the butt, because eventually you're going to lose if you're not skilled. That's the market, right? The market recognizes that's a great point. So now back to your initial question, that how I got into trading. So as I told you, I have a business major, university background. So right after my studies, actually, I moved to Dubai and I got a job actually in the automotive business. So I just a normal office job, basically. Was going through the 9 to 5 grind in the rat race, playing all the political games, corporate. So just a normal corporate employee. And I always say as well, I don't want to demonize the corporate world. For some people, that kind of perceived safety net is great. But for me personally, it was like, when I thought about, hey, do I want to do this, that corporate life, that corporate grind, that rat race, 9 to 5 life, my entire life, then I was like really saying, no, I cannot imagine doing this my entire life. And I wanted to do something that I'm really passionate about. So back in the days, I never knew, like, until like literally, I never knew what I'm passionate about. Like I didn't. So I always like was looking up to people who knew, like, within their in their 20s, saying, I want to become a doctor, I want to become a lawyer, I want to become a pilot, I want to become this and that. I was like, I just want to be, I just want to be happy. I just want to be passionate. I just want to be passionate about something.
Yeah.
I want to be like looking forward, like getting up in the morning and do something purposeful and stuff like that. But I never knew what it's going to be. And then I realized the corporate life, that's not my purpose. So, and back in the days, again, the only trading exposure that you got was basically, through movies, through Hollywood movies, seeing all the day traders driving fast cars, having like 10 screens on the wall and, like that fast paced life. And I was like, okay. And you saw Wall Street, a lot of Wall Street stuff, and that's what I just got intrigued about. And not necessarily that fast paced life, but more like, hey, that you can actually make money online, like virtually.
Mhm.
And for me was in the first place, and I think that's also some kind of, when people start off nowadays with trading, they immediately get into trading by saying, I want to do this full time. I don't want to do like corporate life. I don't want to have this corporate life. They go immediately with that mindset, I need to do this full time. And this adds additional pressure.
Oh yeah.
For me, it was never like, I want to do this full time. For me, it was like, I live in Dubai. I have a great corporate job, but I also make decent money, tax free. So I was able to save a lot of money. For me, it was like, hey, if I can, put this money to work, literally put this money to work and make this money work for me versus me always running after the money. I was like, I'm going to be happy if I can do this for like 10, 20 years. I can retire early maybe, and I have like a nice cushion and have good money on the side, and I can generate passive income. So that was my initial thought. But then because I only knew about stock trading and kind of buy and hold and, like, okay, like this kind of longer term investment. And this is what I wanted to learn. But when I then actually went into trading education, then I got exposed to futures trading, more like short term trading, day trading, swing trading. And then I realized, wow, you can actually make money on a monthly base, every other month. And at some point of time, I was making a decent amount of money where I had the choice, hey, corporate grind, rat race versus self-employed trading, flexibility, freedom, being my own boss. And then for me, it was the choice was easy to make, and everything else is history.
Yeah, it's the freedom that it gives you. But I like that point that you just touched. You didn't just quit your job and just say, I'm going to go full time on trading. In Latin America, it does happen because there's probably a different situation in reference to salary and stuff. Like, for example, here in Colombia, if we talk about the minimum wage is about $250. And, there's families that live out of that, but it's difficult, right? So their thoughts is like, I just want to do this, like full time. And then when they go into that pressure, they can't handle it. So they have to go back. And then there's that thought again of, I'm just, this is probably not for me. But the fact is that if they didn't have that pressure, money wise, then it could have been much easier, their whole process. And it does happen. I have a lot of testimonials about that. People going back and forth because they have to quit their job, or they quitted their job and then they have to find a job to kind of survive. It's difficult, but you did mention that great point.
I mean, look, immaturity, money pressure, less skilled. That's a recipe for disaster. That's it. That's eventually, this cannot end well eventually. So that's why, you need a certain level of maturity. You need first the skill. And this takes some time. This takes really a lot of time. And then you need kind of that, I always say, trade, you have to become process based and not like money centered, because if you run after the money and live also with when you trade and you live from paycheck to paycheck, this is too much pressure. This doesn't work for me. Like I always say, this doesn't work. So if you have that money pressure and live from paycheck to paycheck, you need to build a cushion. You need to build first a wealth bucket. I mean, you need money to make money, and trading itself is already so much pressure itself, right? Mm-hmm. So if you have that outside pressure with like paycheck living, then this never ends well. Yes, you have that one person out of 1 million that has this lucky shot, and has like this 100x trade, but yeah, it's like you have to think about the norm, and the norm is just different.
Yeah, it's like reality is a whole different story, and nowadays with social media, you're coming into social media just recently, actually, because you've been trading for quite some years, but you're growing nowadays in social media, and I know you've seen it a lot. There's a lot of marketing out there, a lot of like wrong view of what trading is. They show people their luxury life and the Lamborghinis and all that. And I don't have anything against that, but the fact is that most people just look at that, just look at what they can achieve, and their whole attention comes out to that instead of educating themselves. So I know you're growing a lot in social media, and something that
nowadays,
something that I love, is you're not really afraid to say you're right. I know there's probabilities. I don't want to say like you're always right, because we're all probabilities here, but
it's always
quite some, accuracy in your predictions. We'll talk about that video that, I reacted to, but how come your predictions are so accurate? Like, how do you do?
That's my secret sauce, right? That's my secret sauce. No, your question is based on, how do I trade, right? So again, I think my edge is coming from trading futures, right? Which is the underlying asset, and then also learning a lot about fundamentals. So in general, if also, this is what I learned about social media. You have to classify yourself as a trader. You cannot only say you're a trader, or you cannot only say you're multi-asset trader. People don't even understand what multi-asset means, but you have to classify yourself in terms of time frame, right? Are you a scalper? Are you a day trader? Are you a swing trader? So if I have to classify myself nowadays, so usually I always said I'm just a trader. So I'm a trader by trade. So that should be enough. But actually, I have to classify myself. So I'm a swing trader. All right. So I'm a swing trader because my execution time frame is daily. I don't go lower than daily. Daily is my execution time frame.
Well,
now,
No, go ahead.
No, ask. Jump in.
I basically, I agree with the daily time frame. I have to be honest with you. A couple years ago, I was a big fan of lower time frames, and then the 1 minute, 5 minute, and I have to be honest, I kind of crashed myself to reality that either I wasn't really good with that time frame, or it just didn't work for me as good. And then when I started to hop into daily, weekly, all those higher time frames, I definitely saw like a big change in my trading. At least my view in market was a whole lot different. So when you say you're a swing, you classify yourself as a swing, is because you're trading on that higher time frame. Daily is just amazing. Tell us a little bit about that. Like, why did you came across that, higher time frame? Why do you execute on the daily mainly?
Yeah, I mean, it's also, well, I also started off like lower time frame, and then you also climb up the ladder, like from just because I always say, if you have time to practicing on lower time frames is great, because you get this immediate response, right? So you learn about a lot about price action and about how the market is moving in general, about candles. If you use candles for your analysis, you learn a lot about that on lower time frame, and especially that immediate response that you get versus, hey, I have to wait now for like 2 weeks for setup to come into fruition, and then I have to wait again until it hits the target or hits my stop loss, right? So for a beginner, that is like, it's is unbearable almost, that waiting game, and because you're not yet patient enough, and you don't need to be patient in the beginning because you need practice in. So that's why practice on lower time frames is absolutely fine. But once you start managing more and more and more capital, especially, right, that lower time frame is not practical anymore because it's not scalable. Because now, as again, I trade regardless, right? Even if you manage a million in prop firm capital, 2 million, 3 million, 4 million. So it's only if you trade only 1% risk of that capital, you have like $10,000 risk, 20, 30, $40,000 risk. Or even if you have like a $500,000 search trader and you pass that $500,000 search trader audition, 1% is $5,000, right? So it's impractical to take like $5,000 plus risk on a 1 minute chart. You take that trade, you go to the restroom, you're gonna go to pee, and then you lost $5,000 in a blink, right? And then you hop on the next trade and you lose again $5,000. And because you trade lower time frame, people have losing streaks and then lose $5,000 over $5,000 over $5,000. No human being can emotionally handle that, right? So that's why it's the problem with lower time frame. So I'm always saying, can you be successful with lower time frame, and can you make this work in terms of win-loss, risk to reward? Most probably not with every single market, but with some markets you can do that, especially with futures. But is it scalable? No, it has its limitations. It definitely has its limitations because what I just explained. So now, since I manage also a lot of capital, and also what is also important, why I left the corporate world is because of that 9 to 5 grind. And I never wanted to why do we trade? Because we want more flexibility in our life. We want throughout the weekend. That's basically it. And literally, it doesn't require more than 15 minutes, maximum 30 minutes a day, maximum. I'm exaggerating. It's never 30 minutes. I'm passionate about charts. So that's why I'm sometimes just sitting in front of it and just checking, the movements and stuff. But a small addiction, I would say. But I don't have to. But I don't have to. So yes, and this is what higher time frame trading can provide, that flexibility, that freedom. It's scalable. So for me, it's just and also more probability. And you kind of confirmed that, if I'm not mistaken. It's the higher you go in the time frame, the more probable, the more predictable the market becomes. You don't have to deal with all that noise and stuff that is going on in lower time frame. So it's way more relaxed and way more chilled. And all of us want to trade for the rest of our life. And this is, for me, the only way how you can accomplish that.
Oh yeah. In other words, lower time frames with time is not scalable. Higher time frames, it is. And proof of that is something that I've also noticed in your YouTube channel. Something that I love about what you're doing is that you have documented various challenges that you've done. And
yes,
I have to be honest, I was so surprised with your win rate. Mostly it's like 100% win rate. And if you don't show it in the dashboard, like, people are gonna say, nah, he's just talking. But
yeah.
I've seen previous interviews, and that is a proof of what you're saying. The higher time frame, in a way, just kind of gets you out of the noise, and I'm a big promoter about quality instead of quantity. I don't want to take like a bunch of trades, because I'm going to probably make a lot of mistakes. And then when you just wait for that A+ setup, you're going to make less mistakes, and everything's going to be a lot smoother. So it's a matter of patience. A lot of people are not patient in trading. Most of the people that are coming into the industry, they're just wanting to make money fast. They want to get funded quick. They want to make like big withdrawals, because a lot of people on social media are showing it, and they just don't focus on their whole process, which is starting.
Yeah. No, I fully agree. I mean, I can just echo what you said. I mean, you're totally right. I mean, we could philosophize about that stuff like for another 2 podcasts about this. It's insane. But yeah, funny, because I just had this, because you said this, I document. So I do this. Yes, it's great. So I like, when I was doing more challenges, I thought, hey, I need a little bit of fun, because for me, this is also fun, obviously. So I need to do like this. I need to record every single day and do like this YouTube challenge documentary. That's how I call it, YouTube challenge documentary, and basically record every day and then publish it on my channel. So I did this for True Forex Funds and Funded Next. And actually, I just had a interview with like the Funded Next, Funded Next, and the guy who interviewed me, it was basically then because at the end, I think I had to open my dashboard, and then I was like, and I was showing like everywhere, like 100%, 100%, 100%. And this guy was like, well,
what are you doing?
That's so flawless. That's flawless. I've never seen like a dashboard like that. So just like, okay. It was so funny, you know.
It is. I'm not 100% accurate, but when you see that, that's very attractive.
Yeah. Look, and I just, again, first of all, I'm not benchmark because, the way, you know, I trade is very unique. Like I have a long history of trading, you know. Don't take me, first of all, nobody should take me as a benchmark. That's very important. Secondly is that second point is, of course, well, I haven't lost for a while, but you know, this is, you have at some point of time, you have losers. Yes. Yeah. But you know, I also, but I want to stress, I only take nowadays I take like one trade a week. Wow. Maybe, you know, maybe maximum 2, depends on what the market gives me. It's a completely different ball game than day trading, where you do like one trade a day, or even like scalping, where you do like 5, 10 setups a day. Of course, then you cannot have this winning streaks. For me, I don't have losing streaks or winning streaks. I mean, you can consider this a winning streak, but I don't have. People ask me, what do you have? Like, how do your losing streaks look like? And with this strategy, I don't have losing streaks. Yes, I have some losers once in a while, but I don't have, like, I might have 2 losers in a row, but I can't remember a time where I had like 3 losers in a row, or not even like talking about 4 or 5 losers. And this is, again, when we talk about day trading and scalping, you have these losing streaks, and they can really be, especially, first of all, you will have these losing streaks. And if you're a beginner, you will have a lot of these losing streaks. And this can be really demotivating for beginners. And this is where, as you also said, like, I mean, then you have these kind of people who try one strategy, you have a losing streak, they feel like it doesn't work for me. They do like strategy hopping. They do another they try something else, another 5 losers. It doesn't work for me. But you need a bigger sample size to really evaluate, hey, does this work for me or not? And you build that skill over time, you know, and then you build patience, and then all these emotional factors. It's like, you know, it's that field is so wide, and it's you cannot just, it's that discussion, again, we can hold for hours, but at the end of the day, it takes time to develop that skill and everything that belongs to that skill, basically.
Oh yeah, for sure. Now, something that I'm also, I know you trade based on fundamentals and technicals. Can we talk a little bit about the fundamental side? Because I know you use certain indicators that you and your team have developed. And it's very intriguing, you know, the fact that this is some information that is very well used on your side to take your trades and all that. But around the fundamental part, how has it been like a game changer for you? Because I know you use it a lot.
Yes, because I do that on, so I use basically I try to explain this a little bit broader in a nutshell, not to like overcomplicate things and overwhelm the audience. So basically, 2 of my, again, I don't like the word indicator. Indicators are usually derived from price, right? I always say that. I have to say this. I have to say this in every single podcast. Indicators are derived from price. Price is lacking. So you're always, metaphorically speaking, late to the party. So my indicators are derived from fundamentals. So what fundamentals I use? Because for me personally, I say fundamentals drive price. Fundamentals, though, lack in market timing, because there you have to be really accurate, right? So that's why I use technicals for market timing. So that's why I say it's a 2-step approach. First, fundamentals to get biased in the market, bullish, bearish, or neutral. If I'm neutral, I stay away. If I'm bullish or bearish, then I'm going to my step 2, which is market timings. There I use supply and demand. I don't know what you use in terms of technicals. Thing. Maybe you... Cool. perfect. So we're on the same page here. So that's great. So I use supply and demand and sprinkle in a little bit of price action, but 90% basically supply and demand. So that's basically my strategy in a nutshell. But when it comes to the fundamentals, so two of my tools, forecasting tools, because they're basically quote unquote forecasting the future, right? So I can predict these market turns. So the video that basically you are reacting on, basically on the US stock market, the US indices. I've done this a couple of times. So I can predict with these tools the big market turns, the bottoms and the tops. And what I use basically is I use something that is what I call is more complex. That is a valuation model. So I compare one market when it comes to US, for instance, the US equity indices. I compare them versus in my valuation model versus the treasury bonds. I can compare them versus versus gold, but also versus the US dollar. And then I'm seeing whether a specific market, like in this case, the US stock market, is undervalued or overvalued versus one of these assets. This is the valuation model. I looked at this at the daily, but I can look at this at the weekly and monthly as well. And I can look at long-term valuation. I can look at short-term valuation. So I can have a lot of variations. And then I do like something that is called, that is basically seasonality with a twist. I don't want to go too much into details, but it's like I can look at two seasonality models that are, one is election cycle seasonality, which is based on the US election cycle. I explained this very well in the video that you're reacting to, right?
You do.
And also I look at normal seasonality, but our seasonality tool can also, then that's why I say with a twist, because all these tools are objective in a way, I can plot them on the chart. They are not fundamentally subjective, because fundamentals usually you would say are subjective. It's not a report that I get. I can literally plot all these tools on the chart. So that valuation model that basically looks like an RSI, right?
Yeah.
So that's why it's basically I can just look at the lines and I see, oh, I'm overvalued, I'm undervalued, for instance. And the same with seasonality. And I show all these tools, right? I show all these tools in my YouTube challenge documentary so people can see that. So I can basically then, what the tool does is kind of predicting the future price movement, whether we see a nearby bottom or nearby top. And then I use all of that I can use on a daily and weekly, but usually I use that on a daily. What I use on a weekly and can only use on a weekly is my COT index. So that's why all these tools are derived from from fundamentals, but from the futures market. And you can only plot them on futures. And then I translate them later on into CFD trading, into Forex trading. But when it comes to that COT index, it takes that entire COT report into an index, and I can see whether, and this is really important, whether the retailers are bullish or bearish, not sentiment, but really in terms of positions in the market, or whether the smart money in futures terms is called they're called the commercial. So they're the smart money. They drive, in most of the markets at least, they drive price. So, and I can see whether they are positioned bullish or bearish in the market. Again, real positions, not sentiment. This is really important. And all these tools together, they help me to get that certain bias. And I can just tell you, if I nowadays say I take only a small amount of trades, and when I take a trade, and all these tools have to speak the same language. They have meaning. They have to tell me I have to be bullish in a certain market or I have to be bearish. And then when this is the case, what you would refer to a plus setup, that I refer to all stars aligned, then basically I have the highest probability. And that's why if I take only these trades, my win rate explodes like to above 80%, because then it's really like insane probability that I can predict these market turns.
That's amazing. And that's why you say you trade multiple assets, because there's a difference there. You trade multiple assets, you analyze a lot of markets, but it's not like
Mhm.
you're trading all of them at the same time in the week. That's a
Yeah,
whole
yeah.
lot different because there's people
Mhm.
that they say I trade a bunch of assets, but they trade them all in a week, and then that's when they start having a lot of difficulties because they're having losses and stuff. They don't have that great approach to it, right? I personally don't trade much assets because it's kind of like my way of doing it, but I like the way
Mhm.
that you put that in out there. It's the fact that you do trade multiple assets, but it's not like you're putting them all in a week. You're trading all of them. So that's something to kind of make people know.
Yeah.
That's the whole different.
Yeah, of course. So my goal as a trader, on a weekly base during the weekend is find the perfect market for that particular week.
Hmm.
And it takes me, because I look at these markets every single day since years, right? And I have my fundamental tools plot on all these charts. So it literally takes me now, if I look at gold, it takes me literally a minute to know whether there's gonna happen something next week or not. That is for me interesting, at least, because I already know gold is going to be interesting by mid of March. Like all the precious metals, they might bottom mid of March, right? So I know that already. Or I know, right? That with a high level of
Probability.
accuracy, and that's what I'm probability. So it's not. When I say I know, of course I don't know. Nobody knows anything, right? It's like I just want to make this sure that like people in the comment section, he says he knows, and you cannot know. Of course I cannot. I cannot know, right? But it's a high level of accuracy, right? So that's why I say, okay, quote unquote, I know we're gonna have a bottom, or there's a nice, let's say there's a nice buy point for precious metals in mid of March, and this is when I'm interested to trade precious metals. And again, same with US equity indices. I know end of March, beginning of April, there will be a bottom. I know there will be, right? There will be a bottom probably. And then I'm looking to buy, right? And that's my approach to the markets. I know at these, okay, I look at these, when will be their big bottom or top at a certain market? And then it becomes interesting for me. So what I call so when we look at top, bottom, and in the middle, I would call equilibrium. And everything in equilibrium, I don't care about. I don't want to trade, right?
Mm-hmm. Yeah.
And I want to just trade these big market turns. So yeah, that's basically
That's
the way
great.
how.
That's great. Actually, when this video reaction comes out, or if you do know English, because there's people that will know, you could go to Bernd's channel, and that video that we're talking about here is about the election cycle, right? Tell us a little bit, just a bit about that, because for me, it's a very well done video. And you do have quite some solid background into the data that you're putting out there. It's not like you're just saying, I'm right. I just want to get followers, and this is going to be this for the year. I mean, I was
No.
telling a couple of co-traders, friends of mine, when we saw that not everyone just comes out and says I'm going to do a prediction for the entire year. And in that video, something that impacts me is like you're saying, you asked that question. Now, do you think if there's going to be wars or certain different things, am I going to change my analysis? And you're straight to the point saying no, because you already
Yeah.
have data, it's 50 years plus data and even more. So tell
100
us a
years,
little
up to
bit about
100
that,
years. Yeah.
because it's a very interesting video. And if you people out there get that, the PDF is free. I have it myself. And if you just analyze this, study it, and then apply it, and then you put your technicals into it, you could get a lot of, good chances in the market throughout the year. So
Yes. So yes, I want to, and I thank you for the last point that you made, is like, you have to, of course, when I say, for instance, like my first prediction is when I said, okay, we might top around the 22nd of February and we go down, and this is a good shorting opportunity, and we going to, we're gonna go down until end of March, roughly, right? That's going to be a nice drop. Now we slowly start dropping, but full disclosure, I'm not yet short because my other tools are not telling me yet to go short. So again, people should not just take their document and just say, because I received a few messages, like just today, I received a message. Oh, I went short, and you can, and literally the message goes like, oh, I went short the Dow Jones in the past 3 days. It went down. you can really see the future, right? That was the message. I was like, yeah, but this will at the end still bite you in the butt, because you cannot just blindly go short or long. When I say that, you need to add your skill. You need to add your edge on it, and just use that document, for instance, and then incorporate your edge, and then you will also get an edge. You know what I mean?
Yeah.
An extra edge, an extra edge.
Yeah.
But just say, 20 second, Bernd said, that's the sweet spot, go short. That's not how you do it. Okay. Yeah. That's just, I wanted to stress that. So the data I use is more than 50 years plus up to 100 years. I look at more than 100 years of stock market data. And when we look at election cycles, so what does election cycle mean? So in the election cycle, let's call it election cycle seasonality, you have 4 sub-cycles. So you have, currently we are in the election year. After the election year, you have post-election year, then you have mid-election year, and then you have the election year, and then the cycle starts over again. Mm-hmm. And the stock market, and for these and every single sub-cycle happens once every 4 years, right? Because that election cycle is a 4-year cycle. So, and then if you look at more than 50 plus years of data, 100 plus years of data, you can plot basically a seasonal graph. And if you look at that seasonal graph of that election cycle, now in election year, the market literally moves pretty accurately based on these cycles. And so that's how you can, and throughout these years, you had interest rate cuts, you had wars, you had bad news, you had this and that and whatnot, right? But the market still behaves like these cycles. That's why I say, regardless of what's going to happen, right? So I don't believe in black swan events, because I say they're predictable based on the data that I look at. Mm-hmm. But again, that's another topic. But so regardless of what's going to happen, the market is going to behave based on that election cycle seasonality, and we will end up higher at the end of the year, right? So all these crash profits, you cannot take, like, they're ridiculous. They're not traders. They just want to make drama, and they want to get the clicks, right? Because it's not like, it would get more clicks if I said, hey, we're going to crash. It's going to be, hey, it's going to be Armageddon. And, that would create clicks. But I say, hey, guys, chill. We're going to end up higher. It's going to be another bull year. Relax. Yes, we will have some swings like every year, but we're going to end up higher, right? And I did this last year as well, by the way. So these election cycles are really powerful by itself. And then you can sprinkle in your technicals on top. Yeah. And then you get really good buy points and sell points, and this is how I make money in that's why I like the stock market so much, the equity indices and the stock market, because they are so predictable with these election cycles. And if I look at my valuation model versus the treasury bonds, undervalued, overvalued, this is so powerful that I just like to trade them. I like to trade that a lot. If this explains, like, in a nutshell, the election.
For sure. In that video, again, you explain it perfectly. So, like, people will get to know it much deeper. If you want to get to know more, watch that video and you'll know it. What do you think about the Forex pairs, though? Does it also apply to them?
So it applies obviously to the US dollar. Mm-hmm. Right, it applies because in general to the US dollar index, right? So and that's why it comes so handy to trade multi-assets, or actually to be aware of multi-assets, because you are aware of something called multi-asset or cross asset correlations. Let's call it cross asset correlations, because obviously the US dollar impacts the stock market, or the stock market impacts the US dollar. Who knows, right? And then you have the US dollar impacting the treasury bonds, or the treasury bonds impacting the US dollar. And then you have gold impacting all of that. And, it's like all kind of has a certain correlation. So yes, obviously, if I look at the US dollar, and I can plot, for instance, I said this in another podcast recently as well. So if I look at the US dollar itself and I plot normal seasonality versus the election cycle seasonality, I can say that the election cycle seasonality is actually more accurate than a normal seasonality, because it's the US, it's US government, like, I don't want to say manipulate, but they're at the end of the day, they're responsible to where the US dollar goes up or down, right? The same with the stock market. It's the US government. So that's why the election cycle is also powerful for the major pairs, the US dollar index. So since the US dollar index is an index, and then the biggest currency in that basket is the euro dollar, obviously then it has like an inverse correlating effect on the euro US dollar. And then, of course, it has an impact on all the other major pairs, British pound, US dollar, Aussie US dollar, USD Canadian dollar, and so on, right? So yes, so absolutely has an impact on the currency pairs as well on a higher time frame perspective. And the only thing that I don't like, and I don't trade, and I don't know if you trade that or not, is like cross pairs, is basically because it just adds another layer of complexity. So it's
I'm actually more of the mayor pairs, everything that has to do with the US. I don't trade crypto. I don't know if you do trade crypto or,
no,
at all.
I
don't like it. I don't like it at all, but there's people
not my thing. Not my thing. I don't need. So yeah, crypto is a different topic, but I just don't need it. Yeah, I like my old school,
I like it. I like it too. I mean, I don't like crypto at all, and I mean, I just haven't really been interested in that market at all, because I feel like I have everything with forex trading and all that. I just feel it's not
same. I have everything. Yeah.
Now, just to kind of end it up a bit, the other side of your trading style is the technicals. Just in a brief summary, like how is that approach technically into your trading?
Yeah, that's super simple actually. So I do something also something called multi-time frame analysis. For sure you do this as well. So I do like a top-down approach, looking from monthly, weekly, and daily. So I basically supply and demand. I draw my supply zones on a monthly, weekly, and daily, and I draw my demand zones on a monthly, weekly, and daily. And then if I execute on a daily, what is really important for me, that is what I call maybe you have a similar principle that I call big brother, small brother principle. That is basically, if I execute the daily has to be inside the weekly, and ideally the weekly has to be inside that monthly zone. So basically what I'm looking at is that weekly zone is here, and my daily has to be inside that weekly, so that I can trade with the power of the weekly zone, because conceptually speaking, it's like the higher the time frame, the higher the time frame zones, the more powerful the moves are, right?
Oh yeah,
because that's what then drives price, right? A monthly zone is stronger than a weekly zone is stronger than a daily zone, and that's why I'm looking that my daily zone is inside, right? Small brother, big brother, inside that weekly zone, and ideally in the monthly zone. So that's one of my most important rules. So that I look, hey, big brother, small brother principle, they have to be inside that weekly and ideally inside of the monthly, and then perfect, let's go.
And do you have like a specific setup or something like that, or just a zone and you just wait and execute?
Give me an example, and then I can.
For example, like a lot of people wait for the zone and then they wait for a break and retest, something like that.
No. I just said, I call it set and forget and get a life. So I just set my trades, right? I just set my trades. Nowadays, just the term set and forget became a bit cringe. But yes, I call it set and forget and get a life. So I just set that these trades, right? My entry point is a limit order, my stop loss, and then I don't have targets. I do my targets manually, and that's and then let's give it a go. Yeah, and that's.
And what about the risk reward? Because I was one of those that when I was in the lower time frame, I was like so focused, badly focused, because that's something that I say, that I wanted to have those tight stop losses, like 5 pips, 3 pips, because you kind of have that ego that you're right and that you're very precise.
Doesn't make sense now.
But through time, I understand, like, and just listening to traders, trading in the floor, a lot of stories, in big traders, they don't really focus on that. They're mostly focused on the risk reward, and mainly like they don't even care about how much their stop loss is as long as they manage their risk. What's your approach into that? Because I know you like don't really care about like how much stop loss is, but your zone
Yeah.
is protected and all that. How do you manage your risk,
Yeah.
especially for prop firms?
Yes. So, yes, my zone is basically my zone. So what I do is basically, yes, let me put it in simple terms. So I have the fixed dollar amount risk approach. So I don't have I don't look at I don't necessarily look at percentage risk. I don't necessarily look at tips or this kind of nonsense. So fixed dollar risk approach, which means for every $1,000,000 that I manage, I take $10,000 risk. Yes, it is 1%, but it's 1% because we have drawdown limits. We have daily drawdown limits, is max drawdown limits, right?
Yeah.
So I want to do this securely, and I don't want to also over leverage my account because of the prop firms, right? I want them to treat me. So I want the prop firms to treat me well, so I don't over leverage my account. So that's why I want them. So I treat them well and they treat me well. So they pay. In other words, they pay me out. So because I don't over leverage my account, right? So,
Yeah, no, I mean that's something that people need to understand is like they just want to get like funded really quick and they over leverage. And then when it comes to the fact that some prop firms are not so comfortable with that because they know like you're gonna manage our simulated capital or whatever, but you're just gonna burn it in about a week or a month after you get funded. So they're really not interested much in those kind of traders, right? So
yes, and the problem is that this is for me like this account flipping attitude or behavior. It's like this casino slot machine mentality, and I'm completely against that. I cannot support that at all. For me, it's all about consistency, consistency and sustainability, and that's why the prop firms. I never had a problem with payouts. They appreciate me. I have interviews now. Now this week, another interview is coming out with True Forex Fund. So every prop firm that I went to and I'm trading with, like I have really good relationship with these people because they know that yes, I'm a profitable trader, but I don't do risky, stupid things. They know what to expect. This is super important. But yeah, these prop firms, people look for these loopholes and doing like this casino kind of mentality. This is not the way what I can support. I really, really dislike this kind of trading behavior. Anyway, so 1% risk. It's just 1% risk because we have that daily drawdown limits and max drawdown limits that we have to stick to. And so $10,000 for every $1,000,000 that I trade, that's my risk profile. And then I really don't care how big the zone is. I might take a weekly zone. I might take a daily zone. I don't care.
Yeah.
And my stop loss, if I trade a demand zone, my stop loss is below the demand zone. And then let's give the trade a go. And then when it comes to very simple, actually very simple, and when it comes then to trailing is. And when price, for instance, moves to 1-to-1, I move my stop loss to break even. And that's a very mechanical approach. Like everything is mechanical that I do, basically.
I like that. 1-to-1, you move to break even, and then you go for what? 1-to-2, 1-to-3?
Yeah, anything between 1-to-2. I might sometimes, if I see that my fundamental values change quickly, I might take a 1-to-1 target.
Okay.
But ideally, I let my profits run to 1-to-2 to 1-to-4, right? So anything between 1-to-1 and anything between 1-to-1 and 1-to-4, basically on these higher time frames, and then with a high win rate, it's like you get quite good results.
This is a great advice for like you guys watching this podcast, especially those newbies or traders that are struggling. I completely am a promoter of saying that if you wanna be a good trader, you got to learn from the best. I think Bernd is one of the best traders out there nowadays. No like unrealistic things. And one thing that you just mentioned there is something that people battle a lot with is that risk reward 1-to-1, 1-to-2. That's a very great approach in trading, taking those profits don't go with the marketing that you got to get a 1 to 10, 1 to 20, 1 to 40.
Ridiculous.
That's unrealistic. That's unrealistic.
Yeah.
And
1 to 2, yeah. Sorry, no, continue.
no,
I didn't
1
want
to 2 is
interrupt you,
perfect
sorry.
for me. I mean, I'm a 1 to 2 fan.
Yeah, no, me too. Like, look, when so my KPIs, so key performance indicators for new students, is like they need only 2 KPIs in trading. It's like risk to reward in conjunction with win-loss ratio. Now, what is weighted more? Obviously, we all know that risk to reward is way more important than win-loss ratio. Although everyone promotes win-loss ratio. Even me on my videos, I promote win-loss ratio. But you know why? Because, you get nobody cares about risk to reward. Nobody clicks on risk to reward. Everybody clicks on win-loss ratio. So that's if I just promote, I have to be, look, I'm always honest. I'm very transparent. If I put on my, look, like on another video, for instance, where I said like, where I basically showed them my A-book funding, $1 million, and my 3 months results. And where I said, like, I made $90,000 in 3 months trading, blah, 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 blah. For me personally, I would have rather said, for me, because I look at my KPIs rather than the money, I'm very process-based rather than money-focused. I would say, hey, I made 9 Rs. I made 9 Rs in 3 months. Look how great that is. This is above my KPI goals. This video would not get any clicks. Sorry to say that, right? So you have to go with what the algorithms, what the people like. You have to say, hey, I made this amount of money. I made this. I have this win rate. It is what it is. But that's why I want to be like fully upfront and honest. So what I teach, obviously, and I do this in the YouTube videos as well, are 2 KPIs: risk to reward, win-loss ratio. So your target for every trader is a 1 to 2 average risk to reward ratio, 1 to 2, and roughly 40 to 50% win rate. If you have this in combination, 40 to 50% win rate, a 1 to 2 risk to reward ratio on average, then you're profitable.
Oh yeah.
Regardless, right? Then you're profitable. And then I say, okay, if you can achieve these 2 KPIs and then 2 Rs per month on average, so throughout the year, 24 Rs on average. And then if you can accomplish this year over year, you can scale up your business, you can increase your funds, right? You can increase your capital through prop firms, and then you're good to go. And then you become a consistent, profitable trader. You don't need anything else. So it's quite simple, but people overcomplicate that stuff.
Oh yeah. I think simplicity is the secret there. Just being simple. Plain simple.
Yeah.
The last thing here I wanted to mention, I said that before, but let's talk about your trading campus. I know you're teaching now, and there's a whole program of teaching. Just, a brief introduction to that, because that's something that why I have you here as well, is because if you want to get quality in education, this is a good option as well. But how do you manage that? Tell us a little about that.
Thank you. I wouldn't have promoted that because there's no need nowadays. But yeah, so basically, I'm also the CEO of a licensed investment consultancy that is regulated by the UAE government. So it's based in Dubai, in the United Arab Emirates. So it's a licensed investment consultancy. This is important for me because most people, they just offer signal groups and then it's like a one-man show. So we are a licensed investment consultancy that focuses on trading education, and we have our own ecosystem. We have our own Apple App Store app that is in the finance section. So we have more than 20 employees, 5 mentors. So we have a real licensed academy, so to say, that is functions as an investment consultancy. So just because people nowadays, when they hear because people usually ask me, hey, what kind of course do you offer, or what course? And we don't offer a course. We have an entire ecosystem where and and once people are part of our ecosystem, they are part of the ecosystem for life. So it's a life, because trading is a lifetime journey. So that's why we give people a lifetime membership to our campus. So it's a whole ecosystem where we do live trading, where we do like practical application sessions, where they have courses, where they have like a kind of a forum newsfeed, kind of Facebook style, all in their own ecosystem, kind of also in one-to-one approach where students can share their screens, where mentors share their screens and students ask questions. So that kind of physical approach that I had when I was starting off, I basically wanted to transfer into the online space to have something similar, not only because I believe that, signals by itself are useless without context, and people will never become successful. It's like a lazy approach for people that just buy into signals. That's my opinion at least. So we have kind of also, we share our trade ideas, but everything with a context. So we have the course materials, we have a live trading sessions where we explain these things. So it's like the whole 9 yards we offer in that campus. So this is really important for me always to mention that that's not a one-man show. It's a real company. So
Yeah, you have a whole team there, and that's amazing.
Yeah, a whole team. Yeah.
Awesome, Bernd. Well, I have to thank you again for your time. This has been a very knowledgeable podcast. Most people that are going to watch it, I know they're going to like it, comment, everything you want in the comment section. And again, thank you for your time. What advice would you give to people, in trading, those traders that are struggling, that are probably, overwhelmed with so much marketing and stuff? What would you recommend them to kind of, change their approach perhaps in trading, and to kind of improve probably skills, knowledge? What would you advise them to kind of, get them
Good
motivated?
point. Very good point. So definitely take it slow. I hate all these Instagram slogans or social media slogans, but at the end of the day, or stereotypes, but it's kind of true when you say it's a marathon, not a sprint. Yes, it's kind of cheesy, but it is cheesy, but it is what it is, so take it slow. A year is nothing in trading, learning trading. Again, have that professional approach. You learn another profession. Any profession takes time. Becoming a pilot, becoming a doctor, becoming a lawyer, becoming an engineer, what you call it, you name it, it takes time. Becoming a trader takes time. So you have that kind of a professional approach. It's a business. You run a business. You're an entrepreneur. So you have to take this as professional as possible. It cannot be a hobby. Then go away from money centered to more like process based. You have to become process based. It's all easier said than done, but these are the tips that slowly people have to, you cannot incorporate everything at the same time, and it takes time. But again, I just want to say that. And then again, I also want to say, that's why there's a lot of scalping, day trading promotion out there, and mostly it is. But if you start off 60-minute time frame to like 1 hour to 4 hour charts, supply and demand, and you start from there, because there where you get a lot of response from the chart. And then once you see like success, slowly you move higher to like 4 hour to daily charts, and you do it based on supply and demand. This is what I trust as well. Well, then you are like, that's my recommendation for beginners. Then you're on a good track to eventually maybe become successful in the long term.
Thank you so much, Bernd. Remember, guys, subscribe
to our channel.
Really. Subscribe to our channel, activate your notifications, and then, enjoy this podcast. Thank you so much. Have a wonderful
Raul, thank you so much. Thank you for having me. Thank you so much.
Bye-bye.